Wait, hold on, don't skip this video. So people who have watched my videos always ask me the question, what are my stock picks? And another question that I always get is, which stocks are best for beginners? So why not just put those two videos together? In this video, I'm going to tell you my 3 stocks for beginners in 2021. Stay tuned. Okay, so let's jump right into it. So with reviewing these stocks, we're going to use fundamental analysis. So we're going to do a lot of PE ratios. We're going to do a lot of return on equity. We're going to do debt versus assets, the whole 9 yards. I have the information right in front of me on this laptop, so occasionally I will be glancing to reading to give you the most accurate information that I have found while doing my research. Number 1 on our list, the first stock that we will look into is no surprise. It's something that I think will fit well into a beginner's portfolio, an intermediate, and also an expert. This first stock is none other than Carreras. So I know enough on because I sound like a broken record because 3 videos now I've spoken about Carreras, but trust me, if something is good, then we should speak about it, right? So let me jump into what Carreras is and what basically they do. Carreras Limited distributes and markets cigarettes primarily in Jamaica. It offers products under the Craven A, Matterhorn, Dunhill, Rothmans, Pall Mall, Newport, and Parliament brand names. The company was founded in 1962 and is based in Kingston, Jamaica. Carreras Limited is a subsidiary of Rothmans Holdings Limited. Upon observation of their stock price, it has been averaging in the region of $10 and it had a year's low of $6.80 and a year's high of $11. So basically it has been active in its trading. Carreras is also at a good value, and we know this by looking at their PE ratio. And long story short, if you have a high PE ratio, then that can indicate that a company's share price is high relative to its earnings and is possibly overvalued. Vice versa, if the PE ratio is low, then the company is undervalued, meaning that you can jump in because it is not priced at its real value. And being that the Jamaican market average is around 21.4 times, that's how you say PE, it's times. So Jamaican average market is 21.4 times, Carreras is 13.9 times. So you tell me that means that Carreras is properly priced, so yeah, it's still affordable. At the beginning of this year, Carreras stock price was trading for around $6, but then I noticed a rally up of their price when they released some news about their product line, and this is what they said. They said that Carreras Limited has advised of its intention that as part of its strategic plan has decided on expanding its product line, specifically exploring the possibility of selling cigarette lighters, rolling paper, shavers, and razors. Carreras anticipates their rollout date for their new products will be around January 18, 2021. So basically when they released that news that we're not just cigarettes anymore, we're giving you a wide product line of things, that is where I saw a steady increase of their stock price over the period from January to now. And I think yesterday they were at maybe $11. They went to $11, so let's see if they stayed there. Oh, a boss gunshot them time, yeah. Another metric to look into would be called the ROE, which stands for return on equity. And this is a profitability measure which shows how efficiently a company's management team has used its shareholder money to generate profits. And if those profits are generally over 40%, then it is outstanding. Guess how much Carreras do? Carreras done 187.5%. Which is way outstanding, guys. So that company and their management team has the ability to generate profits for their shareholders. And what is the main principle of any business? To generate profits. So they're doing just that. Let's talk about money. Let's compare their assets to their liabilities. So Carrera's short-term assets are around $3.9 billion. And when we refer to short-term assets, it's basically assets owned by the company which can be sold or converted or liquidated to cash within 1 year. So their short-term assets are around 3.9 billion Jamaican dollars, which exceeds their long-term and short-term liabilities, which are approximately total to be 2.8 billion Jamaican dollars. And the short-term liabilities can be commitments that the company made which are due within a year, and the long-term liabilities which are more than a year. So if you compare their 3.98 billion in assets compared to their 2.8 billion in liabilities, clearly their assets outweigh their liabilities, and that is something that companies need. Companies need more assets compared to liabilities. So they tick that off the box. Now down to the part that I love, and it is the dividend yield. So Carrera's dividend yield is 5.98%. They are in the top 25 payers of dividend in the Jamaican market. Even though they have been volatile over the last 5 years, I still term them to be a dividend giant. My final remark is that Carrera's is expected to provide fairly similar returns compared to the market in general, or at the same pace as comparable companies. Therefore, I think it is a buy. Second on our list is going to be Mailpack. So Mailpack Limited provides logistics services in the Caribbean. It offers e-commerce fulfillment services from the United States to Jamaica, cross-border online shopping with local landed prices, local online shopping and delivery from local retailers, online shopping, financing, branded MasterCard for shopping online, and sea freight shipping and brokerage services. So basically, you know them people you just order things from, and then they handle all the fulfillment, they ship it and bring it to you in Jamaica. Mailpack is doing that, but on steroids. Them are one of the best when it comes to getting your products from overseas to Jamaica. With their stock price currently in the region of $3, with a year's low of $2.73 and a year's high of $4.43, it has been relatively active in trading. And the reason for pointing out their trading frequency is that it gives me perspective on what the public is doing. If a company is being traded frequently, that means people like it, or people are involved with that stock on the market. Mailpack is perceived to be at good value based on its PE ratio of 21.1 times when compared to the market average of 21.4 times. So let me read a little article that they published. Mailpack Group has announced that the company held a board meeting on September 18, 2020 and declared an interim dividend of 5 cents per share to be paid to shareholders on record on the close of the business day on October 2nd, 2020. With a payment date of October 16, 2020. So by using my little analytical skills of the stock market, I think one of the main reasons they did declare a dividend is that it increased the appeal to the public and sent the company's stock price from approximately $2 to $3, which provided a 100% return for investors. And looking at their ROE, and if you remembered when I said that 40% and over is classified as outstanding, their ROE, which is return on equity, was around 84.7%, which is considered outstanding. So they do have the ability to return a profit to their shareholders. When it comes on to managing their assets against their liability, Mailpack's short-term assets were approximately 291.7 million Jamaican dollars, which exceeded their short-term liabilities of $85.4 million. And looking into their long-term assets, which approximately adds up to $291.7 million, exceeded their long-term liabilities of 13.1 million Jamaican dollars. So my final remarks on Mailpack. Mailpack to me is undervalued and is expected to outperform the average market return. Therefore, I think it's a safe buy for beginners. For our final stock in this list, number 3 spot goes to Grace Kennedy. Grace Kennedy engages in food trading and financial service businesses. It operates through 4 segments: food trading, banking and investments, insurance, and money services. The food trading segment engages in the merchandising of general foods and food products, processing and distribution of food products, and operation of a chain of supermarkets. The banking and investment segment provides commercial banking, stock brokerage, corporate finance, advisory, and lease financing services. The insurance segment offers general and health insurance and insurance brokerage services. The money services segment provides money transfer and bill payment services, as well as involved in the Cambia operations. It has operations in Jamaica, other Caribbean countries, the United Kingdom, other European countries, United States, and internationally basically. Grace Kennedy, or GK's stock price is approximately $80, and it has a year's low of $61.21 and a year's high of $95. So GK has been active in trading, and as I said before, if you want to know how the public view a company, you can always look on the frequency of the trades or how involved it is in the market. GK is perceived to be a good value with a PE of 13.3 times compared to the Jamaican market of 21.4 times. With GK being a staple in homes and with their wide range of services provided, it's no wonder why they are on everyone's list of stocks to acquire. They are a blue chip stock, which usually means huge companies that stand the test of time. Looking at GK's ROE, or return on equity, is a profitability measure which shows how efficiently a company's management team has used its shareholders' money to generate profits. And over 40% is outstanding and under 20% is considered low. So GK turned in a value of 11%, which is perceived low, but don't make that throw you off as yet. Just wait further until you hear what I have to say about it. GK's short-term assets are approximately 93.9 billion Jamaican dollars, and their assets outclass all their liabilities, whether short-term or long-term. So them have capital, can do any big movements that they want. GK's current dividend yield is approximately 1.82%. While GK's dividend is low compared to the top dividend payers in the Jamaican market, it has increased its dividends over the past 10 years. With its low payout ratio of 24.9%, its dividend payments are well covered by earnings, meaning it is stable dividends. So basically all this is saying that whenever GK makes a profit, they try to keep most of it to build the company or to expand the company even further, but at the same time they are paying you dividends and you will be getting a stable dividend, and as it says, they have been increasing over the last 10 years, and that is what you want to see in a dividend company. You want to see increases over the years. My final remarks on GK is that it is expected to provide fairly similar returns compared to the market in general or outpace comparable companies. Therefore, I think it is a buy. So looking at the 3 stocks that I have placed on this list, you can see a couple of things. Carreras is a dividend company. They are in charge of providing an income in your portfolio. Mailpack is the new kid on the block, the new kid with so much potential and is clearly on the right path. So they have the most room for growth, so you will get a lot of capital gains. Then you have the stable stock, the blue chip, the one that doesn't matter, the economy will not fail you, and that is Grace Kennedy. So I mixed these 3 stocks in a beginner's guide because you get the best of all the stock market with these 3 stocks. You get a steady flow of income, you will get a possibility of great capital gains, and then you also get a stable blue chip stock. Anyways guys, this has been Demetress Fairman. You have arrived to the end of the video, and thank you for the support in the past videos guys. They are booming, and I hope we continue to boom all the way to 2,000 subscribers. Thank you for watching, and happy investing.